Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to show you every single stock that I own in my Wealthsimple and National Bank direct brokerage accounts and update you on recent changes to our stocks portfolio. In addition to portfolio update, I will briefly discuss why Louis Vuitton Hennessy stock, which I recently added to my portfolio, reached a new all-time high this week by covering the recent earnings report. And finally, as some of you requested that I talk about this, I will share my perspective on investing in cryptocurrencies. As someone who understands the underlying technology to a very good degree, I can claim that I can be considered an expert in this area because of my technical background in coding and computational research. Okay, the dollar figure of my own portfolio at the moment is close to $75,500, almost $74,000 in Wealthsimple and $1,500 in National Bank brokerage account, and our combined grand portfolio of me and my wife worth around $94,000 today, which is again a new record for our stocks in terms of the dollar value. We have a lot to cover in this video, so let's jump right into this. I first want to start with the overall portfolio asset allocation. This is a nice graphical representation of the stocks we hold in our combined portfolio of me and my wife. This is an overall a concentrated portfolio with 14 different stocks. The top 7 stocks in this portfolio are Meta, which is our largest holding at 19% weighting, Aritzia, our second largest position with 15% weighting, EQ Bank, the third position with 13% weighting, Brookfield is the next one with 12%, TD 11%, Google 8%, and Granite REIT with 7% weighting. These 7 stocks together form almost 85% of the value of our stocks portfolio at the moment, which shows how much I believe in these companies and how much we are concentrated in this position. After these 7 large positions, we have 4 stocks with equal weighting of 3%, which are Killam REIT, Amazon, Canadian Tire, and MasterCard. Finally, we have 3 stocks with only 1% weighting, which are Bank of Nova Scotia, Alimentation Couche-Tard, and Louis Vuitton Hennessy. Of course, the plan is to build a larger stake in these 3 stocks that we own so we can have a much more balanced portfolio at the end. In terms of the sector allocation, financials and tech are still our largest holdings, followed by consumer discretionary stocks. Building a balanced portfolio, a diversified portfolio, is a long process, and usually it takes almost 5 years to build a full portfolio, as some sectors are undervalued at some point in time and some sectors are overvalued. So you need to be patient with the starting position in those overvalued sectors. For example, I love to buy stocks in energy, industrial, and healthcare sectors, and I like to increase my stake in consumer staples. But all of those 4 sectors are overall somehow overvalued at the moment. A few stocks that I love to add to my portfolio at the right price are Canadian Pacific in industrial sector, Pembina Pipeline in energy sector, Eli Lilly and Company in healthcare sector, Costco in consumer staples sector, and even Ferrari or Race in consumer discretionary sector. These are all great businesses. I love the fundamentals of these businesses, but these stocks are a little bit overvalued at the moment. And I'm just being patient with these stocks to be able to buy them and start a position in these companies at some point in future when market sentiment changes and they become undervalued. In terms of geographical diversity, as you can see, most of our money is in Canadian and US stocks, but I recently started a position in one of the best European stocks in the market. That stock is Louis Vuitton Hennessy. I mentioned that I want to build a large position in this company, but unfortunately the share price of Louis Vuitton skyrocketed as soon as I bought my starter position in this company. And the stock was at a new all-time high yesterday after the stellar earnings report. This is a company that I was following for a few months before buying a stake in this company. And for the purpose of buying this over-the-counter stock, I opened a new brokerage account with National Bank, as Wealthsimple does not have OTC trading capabilities. My starter position is up over 13% so far in just 3 weeks. This is a stellar business with extraordinary profit margins and 75 world-class brands under their umbrella, including Louis Vuitton itself, Marc Jacobs, Fendi, Bulgari, and TAG. This is the recent earnings report, and without going into much detail, I just want you to look at these growth numbers. 36% revenue growth in Asia, 23% in United States, and 14% in Europe. These are numbers of a consumer discretionary business in the middle of one of the worst years in the financial markets, with global inflation at the sky-high levels and interest rates at their highest levels in the last 10 to 20 years. And before you say Louis Vuitton only sells high-value ticket items and that's why they're not susceptible to recessions, I would say yes and no. Their luxury brands like their Louis Vuitton products are of course recession-proof, as their customers usually don't care about recession and interest rates, but all of their brands and businesses, even the ones that are not super luxury, performed great in the last quarter and last year, which means this success is also related to great management and customer acquisition techniques of this company. For example, their retail business with Sephora, which is their beauty store, is something that I consider to be more of an everyday place for shopping for women. The product they sell over there are not all luxurious products. Their sales in Sephora was up 28% year over year, which is amazing growth rate for such a large company. Overall, I believe Louis Vuitton Hennessy is an extremely high quality business with global footprint, and I love to build a much larger position in this company, especially if the share price drops a little bit more in the future. Okay, after briefly discussing Louis Vuitton earnings report, now let's look at my personal Wealthsimple account, excluding my wife holdings in her own portfolio. Overall, I have close to 74,000 Canadian dollar worth of stocks in this account at the moment. My TFSA, which consists of only Canadian companies, is pretty much flat at the moment. It's down only 1%. So let's go stock by stock and see what is going on with my TFSA portfolio here. First stock here is Alimentation Couche-Tard, which I added to my portfolio almost 2 months ago. I'm up over 11% on this position so far. Couche-Tard is a company with more than 14,000 convenience stores and gas stations around the globe, which has a fantastic balance sheet and management team. Right now, I have a very small starter position in this company with only 15 shares. My original plan was to put a significant portion of my TFSA room into Couche-Tard, but this stock is just want to go up and barely moves downwards to give me opportunity to buy more. In fact, this stock, pretty much like Louis Vuitton, was at a new all-time high just this last week. I really wish the share price comes down so I can add more to my Couche-Tard position, but overall, even at this price, it is not overvalued. Next, we have Aritzia, which is a fast-growing Canadian fashion retailer with various physical locations in Canada and US. And it is one of the largest positions in our stocks portfolio. I'm totally flat on this position at the moment. Aritzia share price went down significantly during the last few months due to the fears of a recession. I used that opportunity to buy more shares of Aritzia when everybody was panicking about recession, and now I own 200 shares of this company in my TFSA. My wife also holds 135 shares in her own TFSA. I think the risk-reward profile on Aritzia is still very attractive. However, I have enough shares of Aritzia, and my plan for this company is to just hold this stock at the moment, and I am happy with my weighting in this position so far. The next position in my TFSA is Brookfield Corporation. I am down almost 12% on this position so far, and in fact, Brookfield is now my worst performing stock. Despite this poor performance, I absolutely believe in the company for the long run. The management team itself believes that the shares of Brookfield Corporation are extremely undervalued, and by performing a reverse engineering under expectation and adjusting the share value for the spin-off, I came to this conclusion that the expected share price should be around $65 per share at the moment. They also expect their funds from operation to grow by almost 20% year over year in the next 5 years. I looked into the last 10 years of history, and the management team at Brookfield always underpromised in their guidance and over-delivered in real returns. So if you believe that they can just meet their guidance, this stock is massively undervalued at the moment. Next, we have Canadian Tire, which I added almost 3 months ago to my TFSA. I have only 15 shares of Canadian Tire, and I am up already 20% on this position. It is basically my best performing stock in my portfolio at the moment, which is a little bit shocking. Canadian Tire is a company with multiple revenue streams, ranging from retail businesses like Canadian Tire stores and Sport Chek stores to financial services and real estate business. Similar to Couche-Tard, I wanted to buy more shares, but the share price just keep climbing and going up, and I hope Canadian Tire share price actually drops more in 2023, so I will be able to scale up this position and accumulate more shares. I want to have close to 50 shares in Canadian Tire, but at this point, if the share price remains in elevated levels, I'm going to just hold my current shares. Next, I have EQ Bank, which I always called it the golden ticket of my portfolio. It is one of the companies that I believe will reach a new all-time high in the next 2 years, as they have excellent growth roadmap, they have fantastic balance sheet and business fundamentals, they are focused to return value to shareholders, and they have great margins, which those margins are also growing. The stock sold off huge during Silicon Valley Bank fiasco and has been recovering slowly since, and it is currently up 2% for me. I own 200 shares and I'm excited to hold this stock for a very long term and collect those juicy dividends and reap the benefits. Next, I have two real estate company, two REITs. Granite REIT, which is an industrial real estate company with many large warehouses around Canada, US, and Europe. And Killam REIT, which is a residential real estate company with a focus on Eastern Canada and particularly Nova Scotia. Both are amazing REITs with both growth potential and consistent monthly dividends. I'm basically flat on Granite and I'm happy with my position in Granite, and this would be basically another hold for me in 2023. Regarding Killam, I am down almost 7% on this position. I bought a few more shares of Killam in the last 2 weeks and now I own 172 shares and have planned to continue to add to my Killam position in 2023 as my target share count for Killam is 300 shares. So this year should be a year that I consistently buy more Killam REIT. Finally, we have TD Bank here, which is down almost 4%. I bought 5 more shares of TD during the banking system panic to increase my stake in this Canadian bank. There are some short-term headwinds for TD, like their stake in Schwab or their offer to acquire a regional bank in United States, but over the long term, TD would be fine in my opinion. TD is a position that I will probably never sell it and just try to collect those juicy dividends and reinvest that cash flow into my other stocks. Okay, we looked at all of my TFSA stocks, so next let's look at my RRSP account. I plan to hold my US and international stocks in this portfolio. RRSP portfolio is performing well recently and I am up 10.5% in this account so far, which is great. I rebalanced my RRSP in the last 2 weeks and trimmed my Meta position and added to Amazon, MasterCard, and Google. So let's look at the stocks that I hold inside this account. Let's start with Meta. If you remember, I was down almost 68% in this position at some point, and I always mentioned that I believe Meta will come back because it has strong business fundamentals. Of course, it was just a market overreaction to 2 earnings reports and Mark Zuckerberg overspending on Metaverse project. Once Zuckerberg started to pivot from spending on Metaverse and family of apps to efficiency and reducing the headcount of the company, market flipped and Meta is on a run from $88 per share to now $221 per share. This was a good lesson for everybody that if you buy a good quality business, even when market overreacts and share price goes down, you have nothing to worry about and you can simply buy more shares to bring down your average price. Because over time, market will match the intrinsic value of stocks. I didn't buy the dip as much as my wife was buying the dip constantly, and she also owned 35 shares of Meta with an average price of $150. So our overall position in Meta is in green by 14%, and we had over 20% of our stocks portfolio concentrated in just one position in Meta. That's why I decided to rebalance my portfolio and sold 5 shares of Meta and bought 3 shares of Amazon, 4 shares of Google, and 1 share of MasterCard instead. So now I have 13 shares of Amazon, which is up almost 6% so far. I want to buy more shares of Amazon if the share price drops below $100 again, but if not, I would just hold my small stake in this business. I also own 55 shares of Google here, and I am up almost 8% on this position so far. I really want to buy at least 5 more shares of Google and scale up my position in this company. I think Google is still undervalued, and I hope I can have the opportunity to add to this position before it goes on a bull run. Next, we have MasterCard, which now I own 5 shares of this company, 4 shares here in Wealthsimple and 1 share in National Bank brokerage account. I think MasterCard is also an amazing business with fantastic balance sheet, growth potential, profitability matrix, and an excellent return on invested capital. The price to earning ratio is a little bit rich, but sometimes you have to pay a premium to own such a great company like MasterCard. Hopefully, we will have another market downturn so I can build a much larger stake in MasterCard at a cheaper price. Overall, my plan with all of these stocks that I show you today is to hold or add to them in the next couple of months. The last topic of the day is crypto. I don't really show it in my weekly videos, but I have a small portfolio of 3 cryptocurrencies, which I bought all of them during the last year crypto market crash. I invested less than $1,000 into 3 cryptocurrencies: Ethereum, Polkadot, and Bitcoin. I hold all of them on a cold wallet on a Ledger Nano device, and yeah, as you can see, it is up almost 100% so far. One thing you can clearly see here is that I invested almost 1% of our money into crypto. I believe investing in cryptocurrencies is like investing in a software startup company, and there is a very good chance of these projects going to zero in the long run. That's why I invested only 1% of my money into crypto. Even if all of these projects are going to zero, I'm still fine. If you ask me why I invest in these particular projects, I would tell you Ethereum seems to be a great project for smart contracts. I actually have a side personal business and used to interact with Ethereum blockchain, and it is blazing fast and relatively cheap especially after they moved to proof of stake. Regarding Polkadot, the main developer is Gavin Wood, which is a fellow scientist like myself. I actually read his research papers on dot ecosystem and how it tries to be a hub for other blockchains. And that's why I put a small amount of money into this as well. Overall, again, I understand the underlying technologies to a very good degree because of my background, which fits very well with coding and computational sciences, as I have worked on advanced statistical computational methods in my PhD. I also understand the potentials and merits of each of these positions and projects, but at the end of the day, they can still go to zero because these are just startup companies. I would suggest if you decide to invest in any cryptocurrencies, don't put more than 5% of your money into it. And remember, crypto is cyclical. It is like oil and other commodities. It comes with bull runs and major crashes. So you need to sell them when we are in a bull market and consider buying them when we are in a bust cycle. There you are, guys. I hope you enjoyed the video and my transparency in showing you all the positions I have in my own portfolio and also the performance of our stocks. If you enjoyed the video, consider subscribing to the channel to see similar videos. Remember that none of the content on the channel is a financial advice for you to buy, hold, or sell any stocks or crypto. And you should always do your own research before making any financial decision. With that being said, I want to again thank you for watching, and I hope to see you guys in the next video. Farewell.